So thank you for having me on the show. Markets always go up and down. And one of the key things I tell our investors is India is one of those few markets which over the very long term, I mean, if you look at even 3, 5, 10, 15, 20-year periods, have done very well. In fact, over a 20-year period as of end of November, on an annualized basis in dollar terms, MSCI India has actually outperformed MSCI US. So this is one market which has been doing well for a very long time. And there are a couple of key reasons for that. One is, if you look at, the corporate earnings growth relationship with GDP growth, within the EM world, the correlation between corporate earnings growth and India's economic growth is the highest. It's something like 0.62 over a period of 20 years. Whereas if you look at China, it's something like 0.42. If you go down to Korea, it's something like 0.2, or Mexico like 0.4. And so when you see growth in India, you see earnings growth in India. And obviously, that bodes well for investors. Mm-hmm. And one of the key reasons is, cost of capital has always been very high in India. So capital allocation as a result of that has always been judicious for a corporate which wants to survive over the long term. Mm-hmm. Again, a very positive thing for shareholders. It may not, lead to very great GDP growth or economic growth because companies are cautious when it comes to investing. Yeah. But for a stock market investor, it's a big positive.
Okay, we have a minute and a half to go before we hit a hard break. So 2 questions. One is on the IPO rush in India. Are you on board? Because it seems like a bit stretched. It's too much excitement around IPOs.
It's good now because, then you can pick and choose. So we pick and choose our bets. So far it's been working well. We have no regrets.
What about sectors that you like in India?
With the underperformance of financials is one area that we are positive on. And we continue to be positive on industrials. That's been a long-term bet of ours over the long term. And if you look at, consumer discretionary, we are selective, particularly jewelry space, etc. we like. But because valuations have run up, we are selective on consumer discretionary,
Right. I also, very quickly before we go, we have 30 seconds to go. Very quickly, top risk for India.
Top risk is that capital becomes too cheap. Like you saw in the 2007-8 period, when capital was thrown at companies and you had over-investment without taking into account the economic factors.